Hey guys, and welcome back to Smart Money Minds. Today's video, I'm going to be talking about the descending or falling wedge. And this is a bullish pattern that I use regularly. And this means that it's a pattern that we're looking for the chart to break up. So a little bit of explanation about the descending wedge and what it looks like. What we're going to use is this token example here of a falling wedge, which is on CrowdStrike. We have this trend line as the upper trend line, and this is the lower trend line. And you see how the pattern forms where it touches the bottom, touches the top, touches the bottom, touches the top. And it starts to slope down into this triangle pattern. And that's what we would call a descending wedge. Given that, we must have a couple of guidelines, and so it must touch at least 3 points. And the other guideline we have is that the upper trend line slopes down more aggressively than the lower trend line, as you saw earlier in the crowd chart there. And what we see also is that selling pressure is subsiding, even though we're making a lower high, a lower low, a lower high, a lower low. The downtrend is there, but the pressure is starting to relieve itself, and volume tends to dry off until there is a breaking point when the bulls push it out of the upper trend line. So we definitely want to look for RSI for bullish divergence as well. Let's explain a little bit about the psychology behind the falling wedge pattern, because all patterns are based on what other traders are reacting to. So it shows that the selling pressure is dying off and it's getting back into a zone of accumulation where bears are running out of juice to push the prices lower, so it's flattening out on the lower trend line, as you see on crowd earlier. And the RSI also forms a very important piece as well, because you can see that there's some hidden bull pressure coming in while the prices are still moving lower, making it incongruent. And it gets to a certain point where all the bears have sold off the shares that they needed to, and all that's left are bulls to push the price back up and over the upper trend line on volume. So let's take a look at the two examples which I have, which is crowd and on AI. Crowd here has a very signature falling wedge that formed here on the daily. So what I am looking at here is that this is the first point of the falling wedge, and these are where I measure it from. And as you see here, it touched 1 point, 2 point, 3 points, 3 points, 3 on the lower and 3 on the upper. And you saw that as it tried to break out of this upper trend line, we had a reversal hammer and it slowly started to creep over. We also see here that this was an area of confluence, so it could act as resistance, which it did. The next chart I have here is AI, and this is a 4-hour falling wedge from here. So this is 1, 2, and I would consider this 3 and 4. And I started pointing out these points here on the falling wedge. So on AI here, it took a long time for this falling wedge to develop because it is a downtrend for such a long time. What was good was that, as you see here, even within this falling wedge, it gave a 4-hour bullish divergence on this range here, and it led to this bullish move. And once again, it came back down, gave a little bit of bearish divergence on the 4-hour before actually breaking out. And you see this day here on volume as well. It's easy to make an entry on the lower trend line, especially when you start seeing the bullish divergence. And the divergence is that it's no longer in the oversold territory. So looking at crowd here, this was pretty good. This came almost to oversold, and on the divergence right here, this was the double bottom, 168, 67, 168, 76. That's a very easy place to make an entry. What I mean when it's no longer in the oversold territory on the bullish divergence, you can see a little more clearly on AI. For example here, this was in oversold territory. the first part, while this second step here was no longer in oversold territory, it took another low before giving this really good bounce. And coming over here at 58.80, this was not in oversold territory as well. So therefore you see some bulls buying, having some hidden pressure basically, and this drove the price back up and breaking over the trend line. And I myself, I use, instead of the standard 70 and 30 on the RSI, I use 75 and 25. So it makes it even more oversold or more overbought when the line gets dipped below this area. So it makes it very clear for me on the oversold conditions. So with the bullish divergence, it makes for a very good low risk, good risk to reward trade, as you can enter your first position, for example, on crowd. You can enter your first position down here in this zone, which is the lower trend line. And you can stop out if it goes up here and then it breaks down. So this triangle may not be complete yet, or it just could be breaking down into more bear action. But if it's like crowd here and it starts to confirm, once you start your first entry, let's say in the 170 zone, then you can add a second position when it breaks cleanly over the upper trend line and continues. And as for targets, you can always just play this short-term move, assuming that, let's say I enter down here when this bullish or when this descending triangle forms, and I could always look for an exit up here at the upper trend line because you may anticipate it to tighten even more. While the second target is that if it does break out like crowd here, then I look at the distance from the beginning of the wedge. So let's take a look here. From the beginning of the wedge. So I would consider this at the beginning of the wedge, these two prices here. And I would look at this and say, okay, I'm anticipating this to go about 22%. So up to around here. Because the distance percentage at the beginning of the wedge, that's the anticipated distance that it would break up over. So this was very, very close. As you see here, this moved up, it gave a couple of wicks, and on this day, it's continued to basically hit that target. On AI here, similar situation. So I wouldn't consider this to be a first point because there wasn't a down point until here. So what I would use is I would use something from here to here. So this would be a 17% move. So on the breakout, I would consider a 17 to 18% move up to here. So that was very close. It was 74.50, that was the target range, and it hit up to almost 74. Another part of the descending wedge is that it could always backtest and change the pattern. A backtest means that it needs to confirm that the trend has changed. It will go back up near the upper trend line in which it broke out from and test it as a new support zone. And if it bounces from there and the prices move up and continue to break to a new higher high, then it confirms the trend change. So another place for an entry is on the back test with the stop at the lower high or at the lower trend line. So AI here actually gave a pretty good back test example. So as you see here, we broke out, it hit the target, but it came back down. So as it comes back down into this zone here, this zone right here, it basically backtests this apex zone of the upper trend line and the lower trend line touching. And from here, it basically didn't break down further and it bounced. So this is another good area for an entry to assume that this will hold and we can have a stop just below the lower trend line. And sometimes wedges just don't work out or take a very long time to work out because a lot of these wedges could be downtrending stocks. So for example, let's take a look at Nikola from September 2020. From here, to April, which is now April 2021. This falling wedge has been happening the entire time, but notice that there has been no bullish divergence yet on the daily. So it continued down. It never got into oversold territory until getting close in this range. And as you see here, when it made a new low, it continued to move prices down, and then only until now it has hit oversold conditions. So it could continue to move down and tighten up this wedge before volume comes in. And as you see here, this possibly could be a breakout in these last 2 days because the bull volume was strong. It broke out. This could be a back test, and then now we can anticipate and make an entry with the stop at the lower trend line. So in the comments below, let me know if you trade falling wedges and what indicators or guidelines do you use to determine that it is a valid pattern and where your targets will be. If you enjoy this video, make sure you hit that like button, subscribe to my channel for more educational financial videos, and we'll see you guys next time.